Welcome back to Revenue Margin, brought to you by Rob Malenik. Recently, we've had President Trump issuing tariffs that are affecting the U.S. economy and worldwide global powers in China, Canada, and Mexico. There's been some key impacts of these tariffs and that we're going to see moving forward, assuming that they don't come off, similar to like the negotiated solution that Trump and the President of Mexico recently came to. There's going to be higher costs for local businesses and consumers based upon the retaliatory tariffs that will probably occur. In addition to that, these costs will be passed on associated with the higher tariffs to third-party countries. Those increased costs to immediate impact on imports will have an impact to your businesses and consumers. There will probably be some additional stock volatility that will occur associated with this, specifically targeting industries such as tech, agriculture, and manufacturing. But the most key thing about this is that there will be supply chain shifts. So people will move production away from China long term if this continues to be a lasting impact, and start moving to places like Vietnam and now Mexico to be able to shift production to avoid the 10% to 25% tariffs that are affecting both Canada and China at the moment. This is also going to be a boost, though, for our domestic industries. So places that produce competitive products here in the United States, such as steel and aluminum producers, will see immediate gains due to these protective tariffs. But there'll be increasing material costs, and so it'll be a little bit of a mixed bag associated with people having that impact. What will some of this occur? This could potentially have an inflationary impact. It's hard to really to identify if that is really going to cause the growth in these specific goods like electronics, cars, consumer goods, but it could happen. Retaliatory measures will probably occur. Obviously, China has already implemented counter tariffs, but obviously there's been discussions with Canada trying to do a similar type of thing. Market uncertainty, so there'll be continued market fluctuations that will occur associated with this, and there'll be supply chain adjustments like I mentioned before. Well, what does this mean, though, for you as a small business owner? You as a small business owner, though, can look at this as both a negative, but then also it is a potential positive. How do you build relationships and identify solutions within the marketplace? So maybe your product was something that was being produced and shipped overseas. Maybe there's an opportunity for a segment that you haven't targeted locally that normally was dominated by imports, could potentially now be an option for your organization long term to look at. And so you want to look at like what is going on in the industry, and that this not necessarily is this always going to be a bad thing depending on the specific product offering and industry that you're in. But unfortunately, this looks to be a tactic that Trump will continue to play over the next 4 years. Tariffs are never a good thing from my perspective economically, but they do serve a purpose if used to be able to change specific policy decisions that are not economic in nature, and only if they're removed upon achieving that goal. Unfortunately, though, this is going to affect business today, and I think you as a business owner and a leader need to be looking at this and identifying how your organization would be able to benefit from this or react to it to reduce your costs and maintain your margins. Happy to talk more with anybody. Thank you for joining this very unique revenue margin podcast today, because I think it's a symptom of the next 4 years, and it's something that we're going to have to live through and understand how to be able to react to and become accustomed to this type of activity associated within the marketplace today. Thank you once again for joining Revenue Margin, brought to you by Rob Malenik. Have a wonderful day.